Welcome to Two Quants and a Financial Planner, where we bridge the worlds of investing and financial planning to help investors achieve their long-term goals. Join Matt Ziegler, Jack Forehand, and me, Justin Carbonell, as we cover a wide range of investing and planning topics that impact all of us and discuss how we can apply them in the real world to achieve the best outcomes in our financial lives.
Justin Carbonell and Jack Forehand are principals at Validity Capital Management. Matt Ziegler is managing director at Sunpoint Investments. The opinions expressed in this podcast do not necessarily reflect the opinions of Validity Capital or Sunpoint Investments. No information on this podcast should be construed as investment advice. Securities discussed in the podcast may be holdings of clients of Validity Capital or Sunpoint Investments.
Well, we all survived the Tuesday podcast marathon, where we did, and I did probably the least of it, but we did 12 hours of podcasting for a purpose. The event was PNL for a purpose, hosted by, put on by Excess Returns and Spot Gamma. Jack, Matt, and I, and Brent Kachuba from Spot Gamma were sort of the hosts, and we interviewed, for people that maybe haven't seen it, we interviewed over a 12-hour period, 24 different guests on a wide range of topics: macro investing, quantitative investing, value investing, tech investing, technical analysis, and a bunch of other sort of market and maybe some even non-market related stuff. And I just want to compliment Jack, you, on sort of leading the charge here and all your hard work and organization and just effort that went into making the event like really, really good. And what I want to say is there was a lot of failure. We talk about failure points a lot in investing, right? There's a lot of different ways you can sort of fail and fall down. And I think with this event, there was potentially a lot of different failure points, everywhere from people not showing up, technology not working, and actually failure points that happened with the feed going down and Jack having to do the presentation when we had Rafe on, and he's like getting the feedback up and doing the presentation. So anyways, I just think it's just a testament and effort to how the event went, to just what hard work can do. So great job to you, seriously. And I know a lot of people felt that way.
Thank you very much. And, definitely the team at Spot Gamma as well. Like they did a ton of work behind the scenes. There were a lot of people involved there. They built the website. They did just as much as I did as we were getting ready for everything. So they did an awesome job. And to your point about failure, like that's like why I wasn't sleeping the night before. I'm like, we're going to hit the button and this thing is not going to go live or something. And we're going to have like all these people backed up, like trying to be on this live feed that doesn't exist. Because the one thing is when you build it in like this with these 30-minute increments, there's zero leeway in that schedule. Like if you had to start 15 minutes late or something, the whole thing is blown up. Like you have to now reach out to 24 people and tell them they're starting 15 minutes late. It just doesn't work. Like they've got appointments afterwards. Like if this thing didn't work, we were in a whole world of hurt. So I'm happy it did work. To Justin's thing with Rafe, like that was the one time that I was probably a little overwhelmed, and you could probably see it in the video. It's the videos I'm posting after are just the person speaking is only on the screen, but during the live stream, all of us were on the screen. And like I was getting texts from Brent, like the feed is down because we didn't realize. So Twitter says that if you schedule a feed in advance, it can only go for 6 hours. But if you do it live, like where it's not scheduled, you just start it now, it can go for as long as possible. But it turns out the 6 hours applies to everything. So we did it the right way, but 6 hours in, it just shut off. So when that happened, we were right in the middle of the interview with Rafe, and like Rafe wasn't able to share the presentation. So I was like trying with my right hand, I was sharing the presentation for Rafe. With my left hand, I was trying to reboot the feed because Brent was texting me, the whole time. I'm like, please don't say anything to me that I have to ask a question because I have no idea what's going on right now. But thankfully we made it through, and it was an awesome day. I mean, it was great to be able to raise money for Susan G. Komen. It's a great cause. We have to thank Simplify ETFs and Eric McCardle as well. They were our sponsor, and they did a great job, like helping us out in every way they could. So yeah, I mean, I think in general it was a great event, and we're going to keep it going. We're going to have all the replay is up on our channel and on Spot Gamma's. We're releasing all the videos. They were half hour each, so we're releasing them in hour increments with two people paired together. By the time this comes out, we'll probably have about half of them out, and within a week of this coming out, we'll have them all out. So anybody who wants to watch just specific interviews, you can either dig them out of the 12-hour live stream, or you can wait till we release these individual episodes and watch them then. But yeah, overall, I mean, Matt, I don't know what your take was, but I think considering what could have gone wrong, I think we did a pretty good job. I've got a lot of lessons. I'm always very critical of what I'm doing, so I've got a lot of lessons I want to take from next time. But I think in general, it went pretty well.
I mean, move over Jerry Lewis. Jack Forehand's in town. Like this is how it goes.
Can I get a phone bank next time?
I think
behind me.
So I think we need phone banks. We need some call-in operators. There's a number of ways we can really dial up the Jerry Lewisness of this. but it was an exceptional event. And I mean, 24 guests showed up to do this. Like, that's incredible. That's just an incredible group and community effort. This is community at its finest. So cool.
It's crazy to think that, like, when I would always look when I was doing the interview at the end, like, because it would say, you know, whoever's in the waiting room. I had my computer to the left that was actually the producer. So I was like letting people in and out, and like they were always there, which like, I was like, at some point, somebody's going to forget, somebody's not going to show up. Like 100% of the time when I would look, you know, 3 or 4 minutes before they were supposed to come on, they were always there. So like, it was a testament to everybody who came on and the great job they did to make this really easy for us. Cause it could have gone all kinds of different ways. We could have had, you know, Matt having to do a half-hour monologue because someone didn't show up or something like that, or me rambling on about something. So like, it all worked out really well that like, you know, cause we had behind the scenes, we prepared a bunch of backup content thinking like we may have to roll into like this topic or we may have to roll into this podcast. So like based on the different hosts that were there, we had backup topics for all the different combinations, like of what we would have gone into if somebody didn't show up, but thankfully they all did.
Nothing like live. Exceptional. Spot Gamma, everybody over there. You can judge a person by how great their team is. And just like the Validia excess returns team, same with Spot Gamma, just so many remarkable people behind the scenes. Such a pleasure to be a part of. And what an amazing way to raise some money for a great charity.
And just one thing before we get to Justin's going to do the lessons here, but the thing on the live is also like something you don't appreciate. You know, I'd been a guest, I guess, on 3 live podcasts, and then we had done one. Brett and I did a live thing just to test to make sure everything worked, but it is very different. You know, when you're used to, you know, you go now, I'll cut that out later. Like when you've got, not that we cut, I mean, our podcasts are 99% the same when we record them as what ends up in public, but like the ability to trim out all that little stuff, like you don't realize it's not, you know, you don't have that ability. And also like if if I don't have a question in a podcast, if I'm like, oh, I got to go back to my notes, I can't figure out what to ask next. Like it's much easier in a recorded thing. Like if it's live, it's like, you better have a question. You better come up with something. Like even if it's dumb, like keep the thing rolling. So that is a big, Cullen Roche should actually email me after, like live is a different animal. And that's what it is. It's like live is a different animal. Like it's the same thing. I mean, you're still looking at your computer and talking to people on a screen, but it's very different. Like when you know in the back of your head that it's live.
So what we thought we would do is kind of just start at the beginning of the day and work through all the guests and see what lessons we kind of had taken from those discussions. And I think a lot of it will be, you know, there's these big like thematic things that will probably come out of it. And, you know, I might name someone and maybe there is a lesson, there's something quick there, but, you know, there's a lot of people to get through. And obviously not all of us took part in every single discussion. So these first couple, you know, while I was trying to watch it, I was also trying to prepare for the start of my day. So I wasn't able to watch necessarily all of Jack or Brent or Matt's other interviews, but I know Jack at the beginning, you guys kind of started, well, I wouldn't say it was mostly macro, but Andy Constan is mostly macro, and he was our first guest. He was actually the second guest, but we're going to start with him because that was the one that you co-hosted with Brent. But yeah, what was Andy? I know Andy has these, but what is it like looking at the market, like through the plays or the islands or
the islands of macro. Right. That's what we actually called one of our episodes with him, the islands of macro. But yeah, Andy's really cool because Andy is very, Andy's like a blend of systematic and discretionary. So he comes from our world of like systematic because he worked at Bridgewater, but he also like comes from the discretionary world. So he has really good takes on all this stuff. And yeah, Andy's been in like the higher for longer camp for a long time with rates, like thinking rates were going to stay there. But, you know, one of the I have 2 takeaways from Andy. Like the first one is the difference between like having an opinion and then taking that opinion and judging it against what's priced in the market. And so Andy has very much been like the person like rates and inflation are going to be higher for longer, but he recently left that island. He says he turned his boat around, and exited that island. But the reason he did it is because like he saw market pricing, like everybody is now moving into this. And I mentioned this in our previous episode with all these presentations at this conference I was at, like everybody's higher for longer now. Like higher for longer became like a non-consensus thing. Now it's a consensus thing. So like that thing, and it's a good lesson even for like long-term investors who aren't doing any trading, is like, if I am going to have an opinion, I've got to have a good reason why I'm smarter than the market and what's priced in the market. And so Andy's looking at it as like, all right, it's gotten too far on higher for longer now. I think there's more of a recession risk, not now, but in the next few years than people think. I'm kind of have my boat out at sea and I might end up like on recession island. But I think that divergent opinion is really important. And then the only other one, and then I'll let you guys go, is the ability to like, and this applies to everything. It doesn't just apply to investing. It applies to politics. It applies to everything. Like the ability when you get information that discredits what you think to change. And Andy is 100% the best person I know on that. Like he will, if he gets information that challenges his thesis, he will pivot the next day. Like there was this thing, there's this thing behind the scenes where like how much when the Treasury is issuing new debt, like how much of it's long-term versus how much of it's short-term. It's a big indicator he follows. And like there was one point, and I think it was like late last year, correct? He can correct me if I'm wrong, but late last year, like he had been very, very bearish on the market. And like that report came out, and the next day he put a tweet out like, buy everything. Like, you know, and he was 100% right about it, but it was like people were responding to the tweet like it was a joke. They're like, they thought it was like April Fool's Day, but like he got information that discredited like what he thought, and he immediately switched. And like, that's, I mean, we all can learn from that. Like whether it's our market views, our political views, whatever it is, like if we have a certain opinion and then we get information that says that opinion is wrong, it's very hard to change it. And, you know, so those are my two lessons from Andy.
Yeah. I love that Andy maps back against the reality. That's like you just said, that's one of my favorite things about him. That's what I love listening to him for, is there is no perfect, like untestable idea or truth in his head. He's always looking for, how do I test this against what the rest of the world is reflecting back at me?
And I think maybe when you hear like that point about being able to change your view on something, I think is a very good point. It's very important. The only thing I would sort of say to that is, you know, when you're an investor and you're thinking about long-term investing, and these are macro guys. So this is what they've kind of built businesses around, looking at the macro environment and building strategies to withstand various types of macro types of environments. But sometimes, you know, investors can get kind of confused on sort of, well, this guy said this week and then said this week. So you just got to kind of balance the views with sort of your long-term investment goals. And that's why there's people like Matt out there that can kind of keep you in check and say, you know what, you have your trading account over here, you have your retirement account over here, you know?
Yeah. And this is a financial planning podcast, and the vast majority of people listening to this shouldn't be involved in any of that, like any of that day-to-day stuff. But the overall point, like, so what you said about being willing to change your opinion, you know, that still applies, but like, how am I going to get evidence that says that there's no risk premium in stocks, for instance? Like, I'm probably not going to get that evidence. So I don't have to pivot on new information because I'm using long-term information that's not really going to change. So where it would apply to someone like you and I is like, let's say we got overwhelming, and we obviously don't have this, but let's say we got overwhelming evidence that value investing doesn't work anymore. That's a longer term example of the same idea. Would we be able to pivot, and how quickly would we recognize that information and make that pivot? So that's like the overall lesson is like, when you get evidence, and we're not likely to get evidence that value investing doesn't work, and we're big believers in value investing. But if you do get evidence that, you know, challenges something you believe in, how quickly are you able to process that information and make a change? And that's, to me, is the biggest lesson from Andy.
The one funny, and I'm just making this connection right now, like as opposed to taking a hatchet to like your investment philosophy, the little stuff that does change and being able to like grapple with it is client who's a retiree, who doesn't drive a lot, but very capable, actually pretty young still, relatively easily can drive. So she's got this like low mileage car that she's just more or less been like babying for years and whatever else. But she takes it into the shop the other day, and they're like, the bottom's all rusted out. And it's a function of where she lives. Like rust is going to be a risk just because of where she lives. And it's one of those things where it's like the car's still low mileage and whatever else, but this rust has become enough of an issue that the car had to be replaced. And it's like, okay, I didn't want to spend all this extra money getting a new car this year. But we look back, it's like, well, the taxable accounts are up almost 3 times what you're going to need to spend on the new car. Like, you have new information. Would you rather have your grandkids be safe in a new car or be driving the old rust bucket around? And it's being able to grapple with new information and reflect on it to reprioritize. That's the lesson here. And that is a financial planning lesson as much as, please don't switch from like, I've been a Buffett style value investor for all these years, and now I'm going to go trade meme stocks. Don't do that. But do be flexible in your beliefs.
The other one thing with Andy, and I know we got to move here because we got way too many people to get through.
We only have 23 to go. We're fine.
But the islands is actually a big lesson as well, because, and this is something we learn as factor investors, like the ability to take something that's a complex concept and put it into a framework that's simple like that
Yep.
is so important. Like, me is like me like showing a client, like, come look at my regression. Look at the T-stats on this thing. Like, nobody has any idea what you're talking about. But like when you put it in something like the islands, it makes it so much more understandable for your average person to understand what's going on.
So just so we don't skip anyone, we had Mike Taylor from Simplify, who runs their healthcare ETF. I mean, the one thing, Jack, and you were on that one, but I'll just say real quick, I think it's very cool. This isn't a lesson. This is just the mission, or it's to generate returns for their investors in the fund, but then the profits go to the Susan G. Komen Foundation, which I think it's the only ETF out there where its fees, after it probably pays its costs and stuff, the profits go to charity, which is very neat.
Yeah, and I think it is. And that to me was probably the biggest takeaway is, we did this for one day, but they're doing it every day.
Right.
That ETF is basically making fees every single day or making profits every single day that are going to Susan G. Komen. So I think that's really cool. And then the only other takeaway I would have from Mike is, like, I think whatever's going on in healthcare is really cool. Like, we talked about aging, we talked about cancer. Like, I mean, he thinks cancer is something you're just going to be, he doesn't think we're going to cure cancer, but he thinks it's going to be something that you just kind of can live with, and it doesn't cause you to die, and you treat with medicine, and it's just there. He kind of said it's like a detente, like you and cancer are like you're stuck in this middle ground. It's not winning, you're not winning, but you just continue to live, and you eventually die from some other cause. So I think it's all that stuff, GLP-1s. It's just very cool, all the stuff that's going on in healthcare innovation. And Mike is, I think most people think Mike is one of the best healthcare investors that exists. So it's cool to hear that from him.
What about Cem Karsan? I know he always has tons of stuff to say around markets, volatility, his view on rates and where things are going. What was the big lesson there, do you think?
Yeah, well, the first thing with Cem is, like, whenever we have him on, like, you can see, like, if you're ever monitoring, like, I was watching the YouTube stats, like the concurrent streams or whatever, it's like the thing just like smoke starts shooting out of YouTube like, whenever he comes on everything. I mean, we've never found anyone who comes on our podcast who has, like, as loyal of a following as Cem does. Like, anything he does, people just start flocking to it. Yeah, I mean, I think my biggest takeaway from him is it just makes me think about, like, some of the bigger issues we have in terms of not just what inflation is doing today or what it's doing tomorrow, but the bigger picture of, like, if there's going to be more fiscal stimulus, if more money is going to be going to people instead of corporations, and we're not here to argue the whether that's good or bad. Like, it's more like, if that happens, what are the major trends that's going to mean over the next decade? Like, I think about that all the time when I talk to him, because he has a really great framework about how he thinks about this. And he thinks that's where we're headed. Like, we're headed to a situation where more money is going to go to people. There's going to be more fiscal stimulus. We're not going to have this 0% thing where I mean, he mentioned in the podcast, like, without 0% rates, and this is crazy to say because it's the largest, one of the largest companies in the world. Like, without 0% rates, there would be no Amazon. It wouldn't exist today. So, like, it's just, that was such a different world than the one we're in. And I'm not smart enough to know which world's going to win out in the long run. I mean, I think it's very unlikely we're headed back to 0% rates, at least. But it just makes me think about the future and what the implications are. And again, a lot of this is not something me or anybody else watching, this podcast should make any changes to their portfolio based on. But I think it's important for all of us to think about just the issues we face in the world and, like, where things might go. And so that was my big takeaway from him. I think he has a great framework on that front.
Matt, what do you think? United Katie Stockton, that was pretty cool. Katie's pretty awesome, and she had really good things to say afterwards. Should have forwarded it to you. I'm sorry, I didn't. But yeah. What do you think from Katie? What stood out to you?
What's one of my favorite things that Katie said is she talked about using technical analyst. She talked about different tools for different phases of trends. And I think that's such a valuable insight to just say, there's certain things that you're going to kind of always monitor over time, but there's different things you're going to emphasize based on the environment that you're in. I see the financial planning corollaries to this, where it's like, the way you think about, like, spending down assets in retirement is super different than the way you think about accumulating assets early on. Is the same way you're going to pull out a different toolbox or different tools to think about a stock that's gone parabolic versus a stock that's gone sideways and whatever else. And that whole combination of how do you know which ones to pull out and when to help control risk, because that's ultimately everything technical analysis in her perspective is about, controlling risk. It's just so cool to see. You got to learn all these different tools. You got to know when they apply, and there's no silver bullets. She started the conversation. There's no crystal balls. Don't come to me like you think there's a crystal ball. It's such like a journeyman approach to how to apply a craft. I so deeply appreciate her insights.
Yeah, and you're right about that risk point. And, like, the other point that she brought up is, the technicals are the guiding force, and they are telling you when to move in and when to move out and when to move back in. And that, those are two. Remember, anytime you're moving out of something, there's got to be some decision at some point in the future to move back in. And technicals, whether it's the different indicators she's looking at, or you could even look at different momentum types of indicators, are what drives those decisions. So it's, not one decision. Oftentimes it's two.
Yeah.
So.
And you see this with so many disciplines. I mean, with investing, you're trying to get more things right than you get them wrong. None of this stuff works all the time. This goes for everybody. Even the macro guys we had on, technical analysts, factor investing, they're all different time frames. They're all different things. But, we talked about this in our episode with trend following. I mean, trend following is actually wrong more than it's right, but it actually works over time. It's just, you have to be humble in this. You're going to get humbled no matter what you do. You're going to have periods where what you're doing looks horrific. And I think the people like Katie who recognize that, and, talk about both the positives and negatives of what they do, I think is really good.
In the 10 o'clock spot was Mike Green, who we've had on to talk about sort of the rise and impact of passive investing on the markets and stocks. But what were the sort of key insights there, Jack, do you think?
So I don't know if you guys actually got to watch this, but we did not mention passive investing one time for the first time with our interview with Mike Green, which was actually great. We got to hear, I wanted to focus more on his macro insights and what he was seeing in the economy and stuff. He has some really great thoughts on passive investing, and we've done a couple episodes about it, but I wanted to kind of go a different direction this time. Yeah. I mean, I think, we were talking about my big takeaway that's a higher level is this idea that you can't completely rely on any given number. We were talking with Mike a lot about how this idea that he thinks CPI is overstating the actual true rate of inflation a lot. If we're not here to debate that, I mean, we could have a long debate about that right now, but that's not the point. The point is we see so many numbers in the market that tell us so many different things, and you have to be careful about what you're seeing and interpret it in the right way. And we'll talk about this a little bit more with our Ben Hunt interview as well. But this idea that there's a lot of inflation numbers out there, and none of them are truth, truth behind the scenes in terms of what the rate of inflation is. Mike made this point, and Matt's made this a lot on our podcast, is in the eyes of every person. The type of inflation somebody at the top of the spectrum right now that's got a house and tons of wealth is seeing is very different than, the person at the bottom of the spectrum who's barely getting by. So I think that this idea that there are different inflation rates and we can't just trust any given number to tell us exactly what's going on in the world. I mean, I think that's my biggest takeaway.
We had Corey Hoffstein, founder of Newfound Research, and one of the guys behind return stacking on. Matt and I talked to him. I would say, first of all, Corey came ready to play, and he came prepared, and we had a lot to get through. So we used his blog post. It was 15 lessons and frameworks and something over 15 years. And, I didn't think there was any chance we were going to get through that. And basically we got through everything but one. I skipped the one. What
did I give you as the over under before?
Yeah, it was
we were talking 8. Yeah. That was way off. Yeah. I wasn't even close. And I underestimated that Corey would have planned in advance, knowing exactly how much time he had, and would have figured out exactly how to, to get the 15 lessons into the 30 minutes.
And I mean, we told Corey up front that I was going to be a little bit more lightly rounded nature. So I was like, Corey, number 1, this. And then he would rattle off for 2 minutes, and then I would do this. But for me, and by the way, people should go and read that post because there's so much knowledge and wisdom, I think, in that post. You can Google 15 lessons in Newfound Research. It'll probably come up. But he just brings Corey's super smart. He brings a level of it's not skepticism, but it's with developing quantitative strategies, back testing, looking under the hood at things. I just think there's a lot of value in looking at this stuff realistically and deeply, and sort of trying to understand the why behind the numbers. And to the point that Matt made before about Katie, a lot of what Corey is talking about is different ways to manage risk or understand risk and the importance of that. And I think the first one is, the first thing he starts with, that we start with him is, risk can't be destroyed, only transformed. Is that the quote? Do I have that right? Something like that?
I think that is right.
Yeah. So, and, a lot of his stuff plays sort of off of that or into it. So, I mean, for me, that was the big thing with Corey.
Yeah, Corey's awesome. And I also have to thank Corey, by the way, because like in the days coming up to this, I was up till like midnight trying to get all these, we needed 24 outlines for 24 different guests. And like, I saw this thing on Twitter. I'm like, home run, no outline necessary. just give Justin and Matt Corey's 15 lessons and go with it. So I have to thank Corey for making my preparation a lot easier, because he had come up with like a much better outline than I could have come up with just by writing this tweet.
So I think we need to get him on. I think we need to do the 15 ideas frameworks, just going through this lightning round with him. There's totally a investing and financial planning combo episode in this. One of my favorite things he said too was, so I love the can't let conviction thing that he says. I think that's brilliant. I also want to ask him if you can triple net lease your conviction and sell it to somebody else. That's a whole other conversation. Corey gets bonus points for making Don Quixote and Sancho Panza jokes. You will always win me over with those. And yeah, just the marrying of macro ideas with like smaller level skepticism or along the way. Nobody does it like him. He's got a great sense of humor about it the whole way through. And how the heck did he friggin' package? He did 16 too, mind you. It's 15, but there are actually 16 things. He got them all in a half an hour. Amazing.
We then jump to Jerry Parker, one of the original Turtle Traders, trend following guy. And for me, at least, and this has always stood out with Jerry, but like, he's like the best way I can describe it is like a purist trend follower. So when you try to ask him questions around, well, could it be better with this or it be better with that? You know, a lot of times he's just like, no, like you let your winners run, you follow the trend, you don't question the system. And one of the things that he said, which was really interesting, even the trades that go against him, he doesn't view those as like losing trades. He has stop losses on things. He takes small losses, but for him, that's part of the process. Like that's part of trend following is, so, you know, he just takes this very like purist view, and that's like refreshing to me, because a lot of times, you know, we oftentimes want to get bogged down in like the making it more sophisticated, making it more complicated, the more inputs, the better. And, you know, for him, it's not. It's like, yeah, he has a lot of, I think he said he follows like 400 different like assets or instruments, including individual stocks at this point. So there's a lot of things coming in, but in terms of just following trend and listening to trend and trading on trends, like that's what he does.
Yeah, you remember that question, like because that original Turtle Trader exam he had to take to get on there, like he was like one of, I think 12 people who passed out of thousands.
Yeah.
Like one of the questions was, should you love your losers or something? And the answer to that was true. And what was the other one? There was another really good question in there.
I forget. It was more behavioral finance stuff though than it was like, you know.
Oh, it was, does it take money to make money?
Oh yeah, right.
Was the question. And the answer to that was false. And everybody said true to that. And the answer to that was false. But what I love about Jerry is like, he has a system and he follows it. And like all of us have trouble at times following our system. Like Jerry follows his system no matter what. We were talking about cocoa a lot because cocoa has just been this crazy thing that's been in the news recently, but like there's like this new form of trend following where people, and this makes sense as well, but where people have more of a risk managed approach. So like there was this headline he put up there where it was something like something sold off as, you know, trend followers sold at all time highs or something was the headline he put up, which makes no sense because trend followers should not be selling at all time highs. But that is like the new version of trend following. Is the new version is there's like a risk managed part of it, a mean, whatever it is, like where, you know, when it gets too much, or a mean reversion part of it where, you know, you sell. Whereas Jerry is pure trend following. Like Jerry, cocoa's going up. Jerry owns his cocoa. Like he doesn't, you know, Jerry's not worried about all that other stuff. And I think that's really cool. Like he's a traditional like trend follower, and trend following is a really cool strategy. You know, it's, if you just look at the numbers, like whenever you put the numbers of a strategy, like trend following or managed futures or any of that kind of stuff, like in front of an investor against like the 60-40 and against all that other stuff, like, and you don't tell them what it is, it makes so much sense to add to a portfolio. And then when you start telling people what it is, you get into a situation where they're less comfortable with it. But like, these are strategies that would benefit a lot of investors.
And then Jack, you and I, we had never interviewed her. We had Nguyen from Research Affiliates on. I'm trying to think with that. I mean, she talked about AI and the impact AI is going to have on society. And then what I I don't know. Maybe this isn't something, it's not necessarily a lesson, but I kind of thought it was interesting. She kind of had some, what I felt were like a little bit different views than I thought the house views were on, and like, she wasn't like, all in her, we've had Rob on, I mean, this isn't a lesson here. It was just a little bit of a different view than I thought we were going to get from someone from research affiliates that they tend to be more value-based investors. And she wasn't just like, all value. She was, definitely talked about some of these, big US based growth companies and their sort of dominance in the market. And yeah, so I don't know if that's a lesson or not, but
that is the lesson though. The lesson is like the ability to look at both sides because, as you said, she comes from a value-based shop. But her views on AI were nuanced. She wasn't all negative on AI, and she wasn't even all negative on the fact that like investors might be able to make money in AI. Like a lot of people like us that are value guys will be like, all right, AI is going to be this world changing thing, but there's no way you're ever profiting from it. Move on with your life. And that's probably good for a lot of people, but she didn't come from that perspective. I mean, she thought there would be opportunities in AI. And the same thing we talked about the Mag 7 stocks. She wasn't just like, these are overvalued and it's got to end and, just buy value stocks or whatever. It was like, she had opinions that there are a lot of positives about those companies that haven't been true of other companies in the past. I mean, we talked about the idea that, the top 10 companies in the S&P 500 usually don't last decade to decade. And we talked to her about the idea of whether these would, and, you can watch the interview to get all of her take on that. But I think it was great because she had a balanced view. And I think that's important for all of us to, understand that like there's both sides to this. We get trapped in like, here's the value, if I was writing my notes for an interview, here's the value playbook of what a value investor is supposed to say in their hour-long interview. And like, she didn't do that. And I thought that was really cool.
You then jumped on with Darius Dale of 42 Macro to talk a little bit more macro.
Well, I jumped on and then I jumped off because unfortunately my computer crashed about 5 minutes into the Darius Dale interview. Like I just heard a noise and like there was nothing in front of me. So everything failed. And then my keyboard wouldn't come back. So anyway, the takeaway from all that is that Brent ended up on his own for, I was there for about 10 minutes and then Brent ended up on his own with Darius. But what I love about Darius is, obviously we're systematic investors and that's what Darius is. And he applies that to the macro world. Like a lot of guys in the macro world are trying to like figure this out and read the tea leaves themselves. Like Darius is 100% data driven. He has, we were joking in the podcast. I don't think there's a human being walking the earth that's prepared more PowerPoint slides than Darius Dale. He has like 170 slides or something that he updates every month. It's something like that. And it's crazy how good his thoughts are. And so that's my takeaways. I love, Darius is also somebody who's willing to pivot, but he's willing to pivot because he's going completely off the data. He's using the data and whatever his data is telling him. And he has all kinds of different cycles that come together into his opinion. Like I love Darius. Darius is a really smart guy.
We then jumped on with Meb Faber. So we talked to Meb about the way that endowments invest. And he's kind of been critical of just the amount of resources that a lot of these endowment funds specifically, he kind of was using CalPERS, but you could look at a lot of these places. They have, huge staffs and the returns are, some returns are good, some returns are decent, some returns are bad. And he's just been a little bit more, he wrote the book called The Ivy Portfolio, which was trying to replicate these endowment type returns, using low cost ETFs. And Ned thinks you can get, most of the way there doing that. And he recently had on, the guy that runs the Nevada, I think, state pension plan, and how this guy is like, there's two people in this office and they basically just use, passive investing vehicles for the vast majority of the funds. And it's like one of the better performing state pension funds out there. But to me, what I found very interesting, and it's in the headlines recently, and I thought this was a very good point that Meb made. He said that when you think about all the actual clients an endowment fund has and the various sort of views that they may have, you have your students, you have your professors, you have your alumni, you have other donors, and so you have all these. And the reason that came to mind for me is because I was thinking, I don't know if you guys have seen in the news, like students at Columbia are asking their endowment to divest. They're putting pressure on the endowment for them to divest all their holdings in Israel-based Israeli investments. And so you can see how these like different competing stakeholders or constituents could be influencing these endowment funds and the decisions that are happening. And I just felt that that was a very sort of interesting thing to me to think about. You know, it's not like there's just one investor or one client. You have thousands of clients, and each segment of them probably has a little different take on what they want the endowment to accomplish, maybe to some extent. I don't know if you guys agree with that or that jumps out to you, but that's kind of what stood out to me.
No, I mean, that's right. I mean, there's all kinds of competing interests, you know, regardless of what your opinion is on this stuff. Like they have a tough job. There's a lot of different constituencies they have to deal with. You know, it was just in terms of my takeaways from Meb, it was interesting. Like I thought, like, you would have thought based on the way the interview went that like we had looked at all the things Meb's written papers about and like prepped on it, and we didn't. Like every time I'd ask something, he'd be like, we got a paper on that. You know, it's like, even like there was an upcoming, I asked him about like the challenge behaviorally of these models, and he was like, we've got an upcoming paper that's not even out yet. Like, so it's like, it's amazing. Like the depth of research they produce is amazing. Like every question we had like was something like that. But going back to the endowment thing, it is interesting. I mean, all these institutions have layers and layers. You know, they've got tons of employees, they've got high fee managers, you know, and the question is, does it work? And, you know, I'm not here, I don't have the answer to it, but, you know, the CalPERS thing came up because Meb has been on Twitter. Like he's actually applied, I think 3 times when they've had a CIO opening at CalPERS, because he really believes that if you just you could build with like low cost ETFs, you could build a portfolio that would do better after fees and taxes, or they don't have taxes, but after fees than what, you know, they're doing. And it's an interesting debate. I mean, it's not clear that these types of institutions are doing any better than you could just with like these low fee things. And obviously that's never going to happen because, you know, all these people have jobs and they want to maintain the jobs and they can make charts to justify the jobs. So whether it's true or not is not going to happen, but it is interesting to think about. Like, I'm sure the elite institutions probably do produce better returns than you could, you know, with the low fee approach, but most of them probably don't. So a lot of them should probably be doing. And his interview with the Nevada guy was awesome. I'd recommend anybody listen to it on the Meb Faber channel on YouTube. But I mean, it really is somebody, him and one other person. Like, you know, I think he goes and plays golf and stuff. Like him and one other person, it's in low cost ETFs and they're done with it.
I think it's so important. Just, I got to go back and listen to that one because I did not get to catch that one on the live stream. But like the work Ted Seides has done around this too. People don't actually understand that model. It's easy to punch at. There's a lot of complexity to it. And certainly the stakeholder levels make it just a fascinating thing to think about. So cool.
But also to Ted Seides' point, like you can't, if you want to criticize these things, what you can't do is you can't put up the S&P 500 chart over the long term and put it up against this. They have completely different goals as to what they're trying to achieve. So if you're going to compare it to something, and this is what Meb's doing, by the way, he is comparing it to something like this. Right. You need to take something with a similar risk profile that tries to achieve similar goals, but do it with low cost ETFs. Like they're not trying to beat the S&P 500. They're trying to meet spending goals. They're trying to do all kinds of other things. So it's not, the one thing that's not fair is to put up the S&P 500 chart and be like, oh, these things are all terrible because the S&P 500's killed them. You know, if you go to other decades, that's not going to be true. But also like investing purely in the S&P 500 wouldn't be consistent with what their goals are.
Yeah. The risk and liquidity budget balancing of these policy portfolios, it also makes it such an interesting thing to study because it actually gets closer to the real world. Individuals invest in more of a version of that than so many of like, you know, the Vanguardian of the galaxy, like just put all your money in an index fund. You never have to make a decision again. It's like, no, there's a lot of decisions that happen at the margin.
The next slot was with Rafael Resendes of Applied Finance. And this one I would say is the one that probably was most strategy specific. So Rafe started out and it was more of a presentation type mode. So he had, I mean, a couple of these other guys had slides, but Rafe sort of started with safer market investing and that concept. And then what goes into, and when he's talking safer markets, he's talking like safer equity investment in type of investing. So looking at companies that are strong stewards of capital, that are investing above their cost of capital or don't require a lot of high external financing. And he sort of demonstrated why it's important to avoid the destroyers, the bad stewards, and allocate to the strong stewards. And then also, you know, he introduced the concept of intrinsic value investing, which is trying to buy companies below their intrinsic value, and then demonstrated why avoiding overvalued companies and buying undervalued companies based on intrinsic value was a very powerful force. And then it kind of all coalesces into a strategy, at least portfolios that they can kind of look at, like the Russell 1000, and look at like companies that score high based on this type of safer market style of investing, and then avoid those that don't. And the real powerful thing there is, the data that Rafe's showing isn't it's point in time live data that they've had going back to 1998. So it's not back tested data. It's data that's been there, and they've been doing this for a long time. So a lot of good stuff with Rafe. And again, that's more, much more strategy. It was more of Rafe kind of presenting, which is fine. That lended itself fine. Jack and I think Jack asked one question. I may have asked two, and then we kind of called it a day, and we let Rafe run with it.
Well, also, I owe him a big thank you for that, because as I mentioned earlier, I was in complete meltdown mode at that point, like trying to keep the feed up while trying to run the presentation. Like, so I wasn't in a position where I was capable of asking any questions. So, but for me, this is the one I'll re-listen to the most, because it's the one that challenges the way I invest the most. And that's what we all have to do, I think, as investors. This is Rafe is not a believer. We've been putting out these charts forever, like all of us that are value investors, about these spreads and how value is like a once in a lifetime opportunity. And, when you look at those, you have to also look at the other side. And, he had a thing he put up at the end, which I think is the most important thing to look at, which is this idea that, yes, the spread between value and growth is very high, but also growth companies right now have the highest economic margins they've had. You can correct me, Justin, if I'm wrong about this, but like they have ultra high economic margins, and value companies have ultra low economic margins. So if you combine those two things together, you get into a situation where maybe value is more fairly valued and not at this steep discount. Right. And so those are the types of things that as value investors, we need to look at, because it contradicts what we believe. And so that's why I'll listen back. I'll listen back because I was in complete panic mode during this, but I'll also listen back because I think it's the most important one for me personally to listen to of everything we did.
Then Samantha Luddock was on with Brent at Leduc.
Yes.
At two.
Yeah, that was great as well. We should mention, we for ones like Samantha and for Noel Smith, who we skipped over before, like we won't have a ton of takeaways, but that's not because the interviews weren't awesome. They were awesome. It's more because we don't exist in the trading world. And so we don't have as many, I know Matt has started day trading in the wake of this thing, but he needs to build up a track record before he can start commenting on this. But
there's only been so many days for my 0 data expiration options.
Right, exactly.
So far. Yeah.
There's a reason we let Brent do these interviews by himself. Like every interview that you see that Brent does by himself, it's basically because none of the three of us were qualified to be sitting there. And we would not have added any value to it. So, so we really appreciate Samantha doing it, and Noel and anybody else where we won't have takeaways from it, but it's not because there weren't takeaways. It's because they kind of exist in a different world than we do.
And Matt, I think, the next one, Wes really liked your question about the energy drink. What type of energy drink would it be? Would it be a small Red Bull, or would it be a tall boy?
So Wes makes the reference as we're talking to, and I know he's made this comment before, but it was just the way he said it in the moment, about trying to get value juice. And so my hard-hitting journalist question for Wes was like, let's talk about value juice. If you're going to package it and sell it, would it be like in a little bottle? Would it be like a shot glass? Would it be like a little Red Bull can? Would it be like a tall boy? Would it be a 40? Like, I don't know. Like, what would it be? And so I think what we arrived at is it would have to be a taller can, because we needed to have some of the things, like the labels of ingredients included. What was it? Pain, hatred, mispricing. Right.
All the disclaimers.
He had some great ingredients. All the disclaimers for the can.
This is why you're here, by the way, Matt, because there's no chance Justin and I are doing an interview with Wes and we're ending up with like, how would you package value juice? This is where you add so much value to the podcast, because we'd be like in the weeds of some number thing, and like this is your value add.
I am thrilled to add the value to it, and as we discuss later, because I think it came up in the Perth Toll interview, but we'll come back to it, of explaining Wes as a Ninja Turtle, which I think she also very much appreciated. This was what happens when I'm on too many interviews and too many meetings and start to go crazy.
And just if anyone's interested, one of the things that Wes talked about in the back half was this ETF white labeling business, and the 351 tax code thing, and how more RIAs or family offices can kind of move money into an ETF and have this like a tax-free exchange or whatever, if I'm describing correctly. But where I was going with that is, I think it's cool. Like, if you want to see some innovative, interesting ETFs, like all on one page, go to ETF Architect and look at their funds. I think they have 52 different funds now with over maybe like 10 billion in ETF assets. And, there's a lot of innovative ETFs on there that I think investors could, look at and maybe find some value in, and maybe even, invest in if it's right for them. So that's a great business he's building over there. And, they've done great. So
what I love about Wes is like, Wes is he's more than willing to look at the evidence on both sides, but you're not going to break Wes. So like if Wes has a conviction in value investing and he thinks the evidence supports value investing, he doesn't care how long it underperforms. Like Wes is good. You're not going to break Wes's long-term conviction. And I think that's something like all of us can learn from. And I'm sure that comes from, Wes is obviously an ex-Marine. But I think that's really cool that like he's willing, when he thinks the evidence supports what he's doing, he's going to stick with it.
He also said, and it's so obvious. This is the other thing Wes is great for. He can take something so obvious and you all of a sudden realize the philosophical depth of the thing. He made the comment about basically like all value investing is just fear and all momentum investing is just greed. And that's why they work together. I was like, that is so poetically perfect to say fear and greed are what matters. That's why you need value. That's why you need momentum. Chef's kiss to Wes on that one.
you guys then jumped on with Ben Hunt, who you talk to every 2 weeks. What was the topic? What was the lesson?
Yeah, I love this one. This is one we've done like on our breaking news podcast as well. But this idea, this goes back to what we were talking about before. This idea that there's like so many inflation numbers out there, not just CPI and PCE, but core. And then you can trim this out and you can trim that out and you can use the 3 month and you can use the 6 month. And like, no matter what your view is, you can pretty much come up with a number to support it. And Ben calls that the map, which is basically, we have this concept, this nebulous thing of inflation that's sitting out there that is at some rate is occurring in the economy. We want to figure out, how do we know what that is? And so as humans, we want numbers to be associated with that. So we want to find a number that tells us, here is the rate of inflation. And Ben's point was, by looking at all these maps of inflation, we're losing track of the territory, which again is the nebulous concept up here of like, what is inflation actually in the economy? And Ben is thinking about like, when you look at like, I think he's mentioned before, like his town, when you look at like their projections in terms of how much the growth is going to be, every year in terms of their expenses, like those are the things that are out there in the real world that are telling us inflation is still strong. Even if we take the 3 month annualized whatever, and it says, this is slower or that is slower, like it's important to keep an idea, to keep in mind that what we want to look at here is the territory of inflation. We don't want to just look at the map, which is all these numbers.
Ben can talk about this topic. And it was, if nothing else, just to hear him, the verbal version of the note as he explores his way through this and makes the comments about marrying of the expectations of all the different layers, and then how all the people who want to navigate their message to those different layers about how to think about inflation, he breaks down which things connect to which people in an audience that would want to hear it in the way that they want to hear it. It's such a different approach to markets to think the way that he does. And it's so useful for anybody who encounters macro, or for people like me, anybody who talks to clients as part of their daily job, understanding how all these maps don't necessarily mine with the terrain, but they're useful each in their own right. Endlessly valuable. It's endlessly entertaining to talk to Ben.
And I missed that we got notes at the end, Matt. I mean, we didn't have time, but I did miss that. Like whenever we do our breaking news episodes, Matt always like perfectly summarizes it based on the notes he's taken. And we just didn't have time to fit it in for this one.
No, I should say I'm only getting through this because I have notes.
Oh,
These conversations from when we talk.
We were joking. We were going to do another 12-hour live stream after the 12 hours where Matt went through his notes on the 12 hours of the live stream. We could have gone for 24 straight.
So the fun thing is, as we're doing this, I've got all the names on this list here, and I'm halfway down what we might end up with a playlist for the show, just because I'm amusing myself while we have this conversation by jotting down songs for these people. So
Sweet.
We'll see if we get there.
This next one there was a lot of great interviews, and I didn't get to see all of them, but I really enjoyed your conversation with Perth. Perth is she's just a very smart person, very nice person, a very humble person. And probably for me, like, I'm interested what you guys think. I mean, she shared that story that she's never shared in any of the podcast, and I'll let you guys maybe tell that in a minute. But, it's just, I think like what I appreciate and the lesson in my opinion, and I don't know if I have this in me, or if I've ever had it in me, is like when she was looking to get the Freedom Index seated and get it off the ground. I mean, she was willing to do anything possible. I mean, she was going to all these major ETF issuers. She was jumping on, trying to, go to this fishing sort of thing up in Maine because she knew that like Rob Arnott was going to be there and she had pitched it. So it's just like her mission and her dedication, I guess, and willingness to just do whatever it takes to get this thing off the ground was just super impressive and inspiring. And not very few people have that in them.
I'm really, really hoping that I can convince her to do an Intentional Investor, one of the other podcasts I host, on this, because her backstory is just so friggin' interesting. Her talking about just the concept of where this comes from, and I'll relate this back to financial planning. It comes out of our own lived experiences. So this strategy, which has remarkable numbers, has done brilliantly since all the effort it took to bring it to life. It's rooted in her experience back and forth to China as a child, then young adult, then as an adult, and realizing when freedoms are restricted, prosperity isn't allowed to follow. When freedoms are present, there's at least the opportunity for prosperity, for potential prosperity. And she both lives and embodies all of this in a stunningly gorgeous human way. It's a wonderful, wonderful story.
Yeah, I mean, my takeaway from this one is watch it, because I got, I think while we were recording it, I got 3 different texts like that this is the best interview of the day. It was really, really good. And I don't want to even get into her stories too much because I'd rather hear them from her. Like if it's in the feed now, it'll be repackaged and put out, it might not be out by the time this is out, but it'll be out shortly thereafter in a smaller format. Like, and I think I'm packaging all these in like packages of 2, but I think this one I'm probably going to just put on its own. Because I think it's that good and I think everybody should watch it. So, I think that's the takeaway from it.
Matt, you then jumped on with your good longtime friend, Jim O'Shaughnessy, who I guess you've known for 10 years.
This is really great because like I was just talking, my dad always listens to our stuff and I was getting his takeaways from it. And like his takeaway was also like, he loved the Perth interview. He was one of the people that was texting me, during it, but is also, he had watched the Jim one next and he was like, he's like, it's really great Matt and Jim have known each other for so long because it comes through in the podcast. And I'm like, Dad, Matt met Jim when they went live. Like they've never spoken before. So it's a testament to you, Matt, about how good you are at this, that like someone could think you've known Jim forever. And it's also a testament for Jim. But like the fact that you guys could do a podcast where it seemed like you'd known each other forever when you literally had not met until you went live is very cool.
Yeah. To be fair to your dad, I've got at least 10, if not, I've got my What Works on Wall Street book back there somewhere on this shelf. Like, we've definitely interacted before. We just haven't had a verbal, let alone a video conversation. So that meant a lot to me just to get to shoot the breeze with him for a little bit. I loved his point, and one of the things I wanted him to talk about was it's wild when people have success in one thing, and Jim's had lots of success in lots of different ventures. When people have success in one thing and then they want to translate it to something else, and especially if they want to translate it into interests or passions, dare I say, or something like that, because it's really easy to take money and blow it on a hobby. And something I'm fascinated by him and watching him do is take things he's interested in, like films and documentaries and even like music and the arts and gathering people publicly, and trying to figure out where's the business inside of this to help make other people successful. There's a lot of through lines in the half an hour we got to talk together about this type of stuff, but just that concept. How do you actually make an investment in something, not as a hobby, but as a business at the level that he's doing it with the network that he's put around him? Incredible man, incredible conversation.
Yeah, Jim is awesome. Like we'll have him on the podcast as much as he'll come. We would rebuild the podcast around Jim if we had to. Like Jim is one of the best.
I thought it was interesting.
Infinite excess returns loops.
And it's such an interesting, like going from like, quantitative factor-based investing to like, basically VC, where it's much more softer and, much obviously, you're investing in a team, you're investing in a vision, you're investing in an idea, you're investing in passion. These aren't things you can necessarily rate, like you could like factor-based stocks where you're just scoring and ranking and stuff. So I don't know. It's an interesting way to sort of think about how someone can go from that sort of idea of investing and way of thinking to what he's doing now, but Jim's a super smart guy. And yeah, so, all right. Next up was Tobias Carlisle.
Toby.
We had Toby on there. I don't know, Matt. I kind of thought I kind of came out really good with my AC/DC question about value stocks and AC/DC songs.
It was a fantastic question. I'm rarely so thrilled to be blindsided by a challenge like this. Do you remember what Toby said was his, I got to go back and pull what the top one was.
Was it, I think he said Thunderstruck, right?
I was probably Thunderstruck. Yeah. I feel like that's where he started and maybe ended, but.
I'm shocked it wasn't Matt asking this question. Like, this seems like right up Matt's alley.
I was thinking, I wanted to go something like, I wanted to bring in Midnight Oil, like The Beds Are Burning, because I love that song. And like, I kind of felt like as value investors were like, you know, our beds are burning. But then I looked at like the actual meaning of the song, and it was like an environmental thing that they were talking about. So I'm like, what other Australian rock bands? And then obviously AC/DC, I kind of totally forgot about, which there's so many songs that can relate to. Because Jack, it's like Back in Black. Value investing's kind of come back a little bit. So Back in Black, you know, or what was the other one? Thunderstruck, and then we wrapped it up.
I think I tried to crowbar. He shook me all night long into it at some point and realized like maybe there's too much romanticism in that for value investors.
Hell's bells. But yeah, I think and the other thing that I'm trying to think at the outset, Toby was talking about that chart that showed, I think he was just highlighting the different quality of like large and small caps, and how, you know, from a, I guess, value and quality standpoint, it's just, there's a lot. Oh, that small and mid caps, I think, are still below maybe their all-time high from, you know, reverting back. And kind of thinking about the why behind that. Like, why have those companies, which you would, you know, they're riskier companies, there's maybe more of a risk premium there. You would expect that maybe they would be back to where they were a few years ago, and yet they're not, I think, is what Toby was pointing out, and sort of the why behind that. And so we were talking about some of those ideas.
Anytime anybody does any type of value, let alone a deep value strategy, and gets into the different ways that can be arbitrage to like close that gap, that's fascinating, because it's such a more nuanced take on the actual fundamentals of the company, when you're not going to be the one who's going to go do the takeover. Somebody else may or may not be, but you're thinking about what helps close this gap. What are the true drivers of my returns, and why? And that's part of why Toby's awesome. He thinks about all that stuff.
And I think too,
and you guys also, you did some Buffett stuff at the end too, right? That was really good.
I think the Buffett thing was, we sort of asked him like what stands out to him in terms of what the biggest lesson investors can learn from Buffett. And I think, Matt, is it kind of like surviving and being around, and Buffett being like the last sort of like, almost like the conservative nature of Buffett's view, something like that. Am I getting that right? What was you remember?
I think it was just about surviving.
Right. Survivability.
It's like, don't do something that's going to take you down. If you keep surviving and adapting, then you can have your day in the sunlight eventually, but you got to survive.
And then, Jack, you and I jumped on with Bob Elliott of Unlimited Funds. I would say for me, probably the thing that jumped out the most, and I don't know if this is like some big lesson, but you asked him about the GDP number, because GDP came in lower than expected. And he was just kind of like, I don't think he pays attention to that number. And then he gave like a completely other number that shows like completely opposite, like growth is still strong, but the way that he looks at it. And it was just kind of like, you know, a lot of these guys look at these things, you know, you might see a number and the market and the headlines may make a big deal out of it because it's like something that's widely followed. But, you know, a lot of times there's a lot of other facts and figures that might debunk that, or may even be like more important.
Yeah, this idea that like the economy is like this massive barge, you know, is what he was talking about. And it's funny because, you know, to do well at Twitter, you have to be responding to all these numbers day to day and up and down and left and right. But his whole point was like, you would be the most boring Twitter account of all time if you actually just said the reality, which is things change very, very slowly. So, you know, looking at one GDP print that's low or one inflation print that's this or the other thing, it doesn't change like the underlying thing that's going on. The economy moves really, really slowly. So as much as, and I think that's probably the biggest takeaway, as much as it's great for headlines to sit here and look at every single thing and have these opinions on every single thing, like for the most part, this is this slow moving thing that doesn't change a lot. And, getting that direction of that slow moving thing right is really the big thing here, not necessarily reacting to the day-to-day stuff.
Yeah, he's definitely like a level-headed, like macro guy. Like, I asked him about debt too. And like, was he concerned about the level of debt and where that's going? And he kind of was just dismissive of that and saying, no, I'm not really worried about it. And, the U.S. is, it's going to take a lot more for the U.S. not to be looked at as the reserve currency. And yeah, so anyways, it was just, he kind of brings a nice level-headedness, I say, to like the macro.
And he explains things in a way people can understand, more than, there's very few people in the macro world that can do that. Like he explains it so simply that you can just understand, like, here's what's going on. This is what you need to know. You don't need to worry about like all this noise floating around it.
Okay, let's kind of do rapid fire on these next ones, because I think some of these might be a little bit more trading oriented anyway. So Mandy Xu, you were on there with Brent, Jack.
Yeah. Mandy was actually great. If you want to see someone like the deer in the headlights, like, look at me during this interview, because we were talking about volatility, dispersion, and skew. And like and Brent's like an expert in this too. And Mandy's like incredibly smart. Like as they're talking about this, I'm like thinking about it. I'm just sitting there and I'm thinking like, how am I going to ask a question about this? Like, there's no chance that I can come up with an intelligent question about what they're talking about. But I did ask her at the end. I did get one thing in at the end, and I wanted to ask her like about the rise in options activity and what like somebody like me who's sitting here as a long-term investor should think about the risks of the fact that all this options, the use of options is way up. So you can listen to it to hear her answer. She was great, but it was not definitely not my area of expertise. So, and also I was many, many hours into this thing at that point. So I was just hoping like I didn't embarrass myself during that one.
And then you had Cullen Roche to talk. Were you talking about his economic or like macro or economic framework?
Yeah, we're talking about his macro dashboard, which is really cool. It's on the Discipline Fund site. He's got a macro dashboard, which is like all these charts that he pays the most attention to. So it was, again, going back to Corey's, it was another one where I can thank Cullen for the fact that I didn't have to do an interview outline, but like the cool thing is like all those charts actually get at the major issues in the economy. So by just working through those individual charts, we were able to get, Cullen always called himself like pragmatic capitalism was his book and his blog. And, we got a pragmatic take on all this stuff. What's going on with inflation, what's going on with the economy, what the most important things to pay attention to. Yeah, I really enjoyed that one. I thought the dashboard was like a good jumping off point.
And then we had Joseph Wang, which you and Brent did, and Victor Jones. So you were on the Jones.
Yeah, Joseph is I want to get Joseph on excess returns. Joseph is really, really good. He worked inside the Fed. So like it's a completely different take than anybody else you would talk to, because so we tried to get into like what are the major roles of the Fed? What is something, somebody like me who never worked at the Fed, what are like the misconceptions your average investor would have about the Fed? Like I want to do, a half hour was not enough to do what we want to do with Joseph. So I'm hoping now that we're in touch with Joseph, we'll be able to get him on excess returns and do an hour with him, because it just interests me so much. There's so many people who have an opinion on what the Fed should be doing. And by the way, I'll cut this out, but I don't have to stop exactly at 12:15, so we can go a little bit over if we need to. But anyway, there's so many people who have opinions on what the Fed should be doing, but a lot of it is not based in like how the Fed actually works and what the Fed actually pays attention to. So I thought that was really cool from that perspective.
And then you guys closed it out, and I thought it was great that they did it, because I don't know, they're out in Minneapolis. This is Doug Clinton and Gene Munster from Deepwater.
I think Doug is East Coast, and I think Gene is more West Coast.
Still, I mean, both of them were doing it, well into the evening, because this was they did from 7:30 to 8 Eastern time. And, I'll let you talk about the things that they talked about from a technology perspective. I just want to say what I thought was great and interesting was they actually had some diverging views on just different things, and yet they're at the same firm. They're partners with each other. They obviously invest at Deepwater, and they're kind of like they're kind of the go-to guys with a lot of these, technology companies, and the innovations happening in different areas of the economy. And I think Doug and Gene are both super intelligent, super smart, super articulate. But I thought the healthy sort of disagreement was kind of refreshing, like in some way, because it's like, yeah, these guys are working together, but they don't necessarily seem to see eye to eye on everything. But yeah, here they are, building a successful firm, and yeah, so.
Yeah, I'm sure that makes them more successful. Like if you want to see how to respectfully disagree, like you should watch that episode, because they were really great about that. Like they were open about the fact that they have different opinions, and they were able to like respectfully talk back and forth about why they did. It was interesting. Like I had this whole outline of what we were going to do in that podcast, and we didn't do any of it because it was just so interesting, like talking about this stuff. We got into AI for a really long period of time, like how they think it's going to change the world, like some of the behind the scenes stuff in terms of how it works. We got into the Apple Vision Pro, like neither one of them is all that excited about it. I think Gene is more excited than Doug is about it, but neither one of them like thinks it's a game-changing thing. But like when they had to rank, what was really the coolest thing to me is when they had to rank AI, like on a scale of, I think 1 to 100 in terms of like its world-changing, power with like electricity, I think would be 100. Like Doug had AI at 99, which was well above the internet. So
and where was Gene? Gene was at 40, right? Or something?
90?
Oh, he was at 90.
90,
okay.
I think.
Yeah,
he was
okay.
high, but not that high. But yeah, it's interesting to me. Like none of us have any idea how AI is going to change the world. But when guys like this that are inside of it every day, like see that kind of potential, like I know what it's going to be. And I had asked them, like, which was a dumb question. I had asked them, like, how's it going to change our lives in 10 years? And then I kind of corrected myself later, like, really, with the rate AI is changing, I should have asked them, like, how's it going to change our lives in 10 months? Because it's moving so fast that, like, who knows what's going to happen in 10 years? But it's just that is what struck me, is like how optimistic they are. And Doug's more optimistic than Gene, but about how much this stuff is going to change the world. So that was really cool. And it was a good change of pace, by the way, too. After doing all this stuff all day, like to just be able to like, this was more of a conversation than anything else we did. Or maybe like, Matt's with Jim and some along with Perth were also great from that perspective too. But like, this was just, we threw the outline out and we just talked about what's going on.
I thought Brent's question about kids, he kind of got, that kind of spurred some thought, like how the kids today are utilizing technology and how that's changing, the way like that these kids develop and just the focus that kids have and, all the different things that this technology is doing and the way that these kids use the technology, it's like kids today are going to be using technology when they're adults completely differently than the way we use technology. I mean, kids these days they have 5 different screens up, they're multitasking.
Yeah. Well, like one of the things I thought was interesting is this idea that like, we all grew up, and I hated this, so it's probably good for the kids now. Like we all grew up, like you study this topic and then you write this paper about the topic. Like that's over. They kind of mentioned this, but AI can write these papers so well that that's not going to be part of like the educational system. Like there were like these AIs that defend against the other AIs. So like the AI that could figure out that the AI wrote the paper, but like that's kind of going away now. I think that the AI that is smart, that can write the paper is smarter than the one that can defend against it. And it's just like the way we learn and the way, if you want to learn about a topic, I mean, you're going to be able to just type a prompt into a computer and you're going to get like this summarized version of that whole topic. I don't know what it means, but it's definitely going to change the world in a lot of different ways.
Well, that's fascinating. I really want to hear this one now. I didn't get to hear this one yet. So I am vowing I will be back. I'm going to put some time into this weekend. I know I have a couple of holes, but I have at least 24 tracks here on these conveniently 26 lines of legal pad in front of me, where I think I might have a song for each one of these people. And I've got some good ones in here, right from Islands in the Stream with Mr. Constan all the way through, Maps with Ben Hunt and, maybe even 10 Crack Commandments for Cullen Roche. We'll see what sticks and what falls off, but I have thoughts.
All right. That sounds good. What we'll do is, let's try to open up the next episode with our 24 track, PNL for a Purpose, double-sided disc.
And yeah, just so we mentioned it, and just so we mentioned at the end too, like this, we will have the donation link on this episode. We're still running the fundraiser for Susan G. Komen. Any episodes related to PNL for a Purpose, we'll maintain as part of the fundraiser. So if you are able to give, if you're still listening to us after an hour and 10 minutes, if you're able to give, there's a donate link next to the video. We would really appreciate it.
All right, guys. Thank you for watching. We'll see you next time.
Hi, guys. This is Justin again. Thanks so much for tuning into this episode. You can follow Jack on Twitter at @PracticalQuant. You can follow me on Twitter at JJCarbino and follow Matt on Twitter at @CultishCreative. If you found this discussion interesting and valuable, please subscribe in either iTunes or on YouTube, or leave a review or a comment. Also, if you have any ideas for topics you'd like us to cover in the future, please email us at excessreturnspod@gmail.com. We would like this to be a listener-driven podcast and would appreciate any suggestions. Thank you.